Hello, everyone. Welcome back to the show. Today, I have a returning guest for the third time, Joseph Armeanio. Many of you may know him as a member of the Ergo Foundation and Business Manager, and also as an active community member advocating for transparent assumptions and open source frameworks in the crypto industry as a whole. So, we're recording in May of 2023. A lot of funny things have happened. What are your current sentiments about the crypto space at large, considering the latest developments in legislation, lack of regulation and clarity here in the U.S., and just overall abroad, and with Bitcoin and everything going on?
Sure. Well, I think, if we're going to look at things today, we have to look at what we just kind of went through as an industry. We had the Luna fiasco, where, one of the largest stable coins in the space blew up. That kind of created a ripple effect that has gone through, a lot of the quote unquote TradeFi, which is like custodial yield based companies' products in our industry. We had FTX blow up, which, as I'm sure there was a ton of people that lost a ton of money. And part of what that's done in a way is I don't want to call it like we talk about total locked value on chain, right? There's a lot of total locked value that's locked up in legal processes right now. And that creates kind of a big unknown in our industry that, I know it's kind of slowly unwinding, but there's still a bit of a mess to clean up there, right? Um, so industry wide, I think that's kind of one thing to keep your eye on. If you're talking about like the latest in terms of legislation, it really depends where you are. Like we tend to look at things from a very Western perspective because we're Americans, and you can say, okay, well, you have number one, a White House that is pretty hostile towards proof of work, even though it does, potentially offer some really neat capabilities in terms of grid stability and, advancing how power is transmitted. But, that's not really in line with the political narrative of the day. You have an SEC that is basically created this fog in the space where they have no clarity, no forward guidance. They say, hey, come meet with us. We can be friends. And oddly enough, the individuals and companies that they've gone after have been the ones that have met with them. So it's not exactly as though that's put a uh, message out into the world. We're open for doing business, right? Um, Now, there's also kind of a countercurrent in politics where, you have a couple of states that are starting to uh, embrace this idea of sovereignty of money. You can look at like Texas, Wyoming, Montana. Then you have other states that are moving in the other direction. An example would be New York has always been a pretty hostile environment to crypto. So, in a way, it kind of creates a political divide. But outside of our own bubble, you can look at, the current state of the industry in Dubai, the current state of the industry in Singapore, the current state of the industry in Hong Kong, and you see things are evolving, right? You see, even you could look at like El Salvador, what they're trying to do with Bitcoin. So we're kind of seeing movement in both directions, both anti-crypto, pro-crypto, and it is becoming a political issue, right? So I'm very curious to see how that starts to impact things not only within the United States but abroad as well. Because if you're an emerging market, it does offer access to global liquidity, right? And there's a certain appeal to that. Then you have kind of uh, let's say parties that are much more resistant. They see it as something that they can't necessarily control very well. And the truth is, there is a fair amount of sketchy shit in the crypto space, right? This has been like meme coin week, where These things are basically minted for basically nothing and then marketed. And, if you get in early, you make a lot of money. If you buy the top, maybe wait for the next cycle. I don't know. I like to call it a game of musical chairs, where when the music stops, there might not be chairs, right? Um, and that type of behavior is, it's immature. People do get hurt. I understand people make their own choices, take their own risks, but I see it as, there's a lot of manipulation there. Looking at just the background of the industry and saying, okay, well, if you can do that and you get, multiple exchange listings lined up that quickly, how does that happen organically? I would have questions that, I don't have the answer for, because, well, that's why I have questions. But to me, it seems like some shady stuff.
Your
Now,
position on, oh no, go ahead.
in terms of like, let's say the larger crypto space, there's a lot of great technological developments, right? It's kind of like the internet is what I say, in terms of the internet offers like all of this access to information and tooling that people can use to enhance their life. And then there's a lot of stuff that can waste your life or ruin your life, right? And so you kind of have to allocate your time wisely, allocate your energy wisely, or in this case, money wisely. So in terms of like the long-term future of the space, it needs to mature, certainly. And, you know, it's sometimes hard to promote that, but I see a lot of value there. So, in the long term, I'm excited to be a part of it.
Your position has always been, consistently everything that is sort of like a remedy to the space that we work in, that we kind of
Mhm.
are active in. You want clear, transparent assumptions. You want more open source
Mhm.
frameworks, and clearly that is not the majority of what comes out of this space. So, I mean, how do you retain your optimism that it will change long term?
Well, I think that ultimately, if you look at the idea of having a trustless, transparent system with clear risk assumptions, um, that is pretty much the opposite of what we currently have, not just in the crypto industry, but even if you look at like larger, um, look at the U.S. economy, right? In terms of forward guidance, what's the Fed going to do with rates? You get a group of old men, you put them in a building, and it reminds me of the election of the Pope in a way, where it's like you got the closed door, and then you get the smoke out of the chimney, and then, oh, this is what we're going to do, right? And so, how do you have economic stability when we're relying on archaic systems? We're like, we're moving into a digital world where everything is moving so much faster, right? Um, and so the consequences of those type of choices, which are, kind of being, quote unquote data dependent, maybe not. We don't know if the data is even accurate that, we're looking at. Um, there's no like long-term stability. And that, yeah, I think a lot of people feel that, right? You can say, okay, we've raised rates continuously. That's going to put some pressure in our economy somewhere. Suddenly, financing stuff gets more expensive. Money starts to rotate, into where there's yield, and it creates an economic distortion. And then we have another, papal election, and things change, right? And so it creates a lot of inherent instability. We're talking in the U.S. anyway about this potential of kind of like a debt ceiling, which we go through every, so often, where politicians play chicken with each other with the fate of, the quote unquote, global reserve currency and economy on the table. It's insanity. So, I'm not surprised that um, the push for clear assumptions, open source auditability, and predictability are uncommon because we don't have it, right? And so, a lot of people, they take traditional business logic and they come into the blockchain space, and that's how they build. Like, what would it be like today if you had the ability to run an audit on any publicly traded company in real time. I think pricing would change really quickly, right? Instead we get different accounting methods that are thrown to the public maybe once a quarter, and they may or may not reflect reality depending on what kind of accounting tricks are happening in the back end. So I'm not surprised that it's not popular because it's not adopted. But the reason why I talk about it is because it creates an idea of actual change, right? And change itself is disruptive, and people tend to dismiss it and want to stick with the old because they know how it works.
Right. Speaking about dealing with the old and understanding how it works with Bitcoin lately, how do you feel about the ordinals situation and the BRC20 tokens on a layer one that has historically been difficult to scale, more often intentionally than not? And I saw you post about fungibility, or you retweeted from my dear friend Adam Back. Um, and it really got me thinking about this idea of inscribing individual satoshis with this kind of permissionless NFT minting
Mm-hmm.
mechanism, where, for example, if you were to hold NFTs with imagery that were deemed illegal in the country of your jurisdiction, would therefore those satoshis be illegal for you to own if you were to be discovered and linked your wallet with, it could get very hairy in that
Well,
way.
start from the beginning. What do I feel about it? I think it's funny, right? That's what I feel is humor, because there's always been this narrative in the Bitcoin community that Bitcoin never changes, even though, if you look historically, there's been, Setwick and Taproot. And so this is a consequence of one of those changes, right? And there's probably going to be some more Taproot tricks long term that come about. I'm not against Taproot, right? Ergo runs Schnorr signatures. I think it's at least progress. But, if you go back to the blockchain size wars in Bitcoin, where, you had the big blockers and the small blockers, and then the Satoshi Vision blockers, which are their own unique characters, let's just say. I never really cared too much at that point. One thing I really like about Ergo is this ability for miners to adjust that on the fly, right? Because then you have this ability to react to off-chain conditions and on-chain conditions, and hopefully, you get some consensus in terms of how to adapt to that. An example would be like if we had that large of a mempool congestion, miners could vote to increase the blocks, and it could be temporary even until they relieve that congestion, and then they could vote to decrease the size of the block, right? So, being that there's no ability for them to react to demand or supply of block space, they're kind of locked in one stuck thing that probably will not always fit. But I think that anybody that's ever tried something that's one size fits all realizes it can be a little bit wonky. In terms of fungibility, that would be long term. It's an interesting thought. I like the thinking of that, because it shows that you're not thinking where you are, you're thinking multiple steps ahead. But it would take a long time to mint enough that the amount of satoshis start to really impact fungibility, on like a practical level. I guess you could always have like somebody that pulls a shitty lottery ticket and it's like, oops, you can't own that there. But, long term, who knows, right? I think it's interesting. I'm glad to see at least some progress on the Bitcoin side. It's paying miners, which is good because, well, market conditions have not necessarily been the greatest. And, for the most part, over the last 2 years, energy costs haven't been very friendly either. So in terms of like the economic side, that's probably good short term. But, at the end of the day, I just think it's funny that, it shows Bitcoin changes, right? That's always kind of been their narrative is, Bitcoin will never change. And it's like, well, it kind of already has. It's just starting to catch up with you guys.
Yeah, it appears to be a very inconsistent narrative that they run over there. Um, Now, for the El Salvador pilot program by adopting Bitcoin as legal tender, obviously this is a very big disruption because as Salvadorians pay for everyday things, the ones that choose to in Bitcoin, obviously the transaction fees far exceed
Mhm.
the things they're trying to purchase with that Bitcoin. So it kind of becomes a chain of the privileged if the transaction fees don't go down, similar to Ethereum. We
Mhm.
don't ever know if congestion will go down there. And I mean, what is stopping you from um, attacking the network with congestion by minting, hundreds of thousands of NFTs, and just keeping it out of the hands of people to use it as a payment system that would be low cost without going to custodians.
Yeah, block space has always been a scarce resource, right? I think in most people's experience of reality, probably the simplest way to look at it is it's like you're renting block space, you're renting an apartment, right? So how many people are lining up to get an apartment? And you have to, at least in the majority of blockchains, you have to outbid them. Otherwise, you're gonna have to wait until the next block, and then a certain number of slots come up, and you kind of have this bidding mechanism, right? And so naturally, when the market gets big, uh, pricing goes up, right? And so in terms of like having unlimited block space or uh, it's just not the case. These are limited systems. And when you talk about this idea of replicating the network, across the planet, you're always going to have a certain bandwidth issue there. It's just a networking problem, but I don't see it as necessarily negative. It's just a, longer term question of how do you scale? And, there's a lot of different, ideas there, and they all come with their challenges and kind of engineering trade-offs. Um, but in terms of like net expense, it shows demand. Like that's kind of where I start and stop. Like, I understand that, there's a lot of people that want to use Lightning, and, running a Lightning channel gets more complicated and probably more expensive, in that, uh, let's say, high demand market. But, to be honest, probably should try to engineer for these scenarios, right?
What I found interesting about Ergo and how Kushti thinks, right? He's not just stopping at the native asset of Erg. He's working on chain cache, which
Mm-hmm.
kind of helps to separate this idea of, kind of a resilient network with 2 minute block times that's very, conservative enough to withhold the security standards up, but
Mm-hmm.
fast enough so it's not, just taking forever and it's actually moving along with as technology, gets better over time. And then you have the elastic peer-to-peer cache system
Mm-hmm.
that, would allow you to kind of render those notes on top of it. So it kind of, in a way, maybe it's naive of me to think, but it reminds me of having like a gold standard with the US, before where you used to have the cash backed by something, and this something would be ERG, and then the
Mm-hmm.
chain cash would be the legal tender on top of ERG. And that seems to make more sense than one blockchain and a native asset trying to do instant transactions and also trying to be decentralized and keep security assumptions high. Seems like you can't really do all three at once. When I think of
No.
Nano or Bitcoin Cash or XLM, that may be low cost and maybe quick, but it just seems like this is always a trade-off that has to be made on how are you going to design and who you're designing for, and what's the end goal at the end of the day for your blockchain.
Sure, I know that Alex's long-term thinking goal and more passion has always been around like counter economic stuff, which is not as much profit driven. It's more like how do you get people to exchange value in a way that, is low cost and works for them. And, sometimes even strange. If you look at like the Let system that we've had proposed forever, but then new things come up and we never seem to get to it, right? That's very different because it's not so much a pure profit driven model. It's just how do you get people to use technology to exchange goods and services in a way that benefits their community in a way that's trustless to where nobody is in charge, right? There's no leader. It's just a system you can plug into and use. And, chain cash is kind of similar to where, yeah, there's definitely kind of like a let's say commercial or even institutional case you could make for that, but there's also a case you could make for it for people on the ground in terms of it's kind of creating their own form of collateral, whatever that is. And the truth is we're not that far from you take a picture of something on your phone and boom, you have an NFT and that's your collateral, right? Is the real world good that you're then trading or using locally to trade. It's kind of like I don't know, having an asset to finance something, right? But locally in P2P. So you could do a lot of cool things with that.
What do you think it will take for developers to really take a strong look at what they're building on Ergo versus elsewhere, or even outside of the blockchain space? It's a common question. I'm sure you get it in AMAs.
Mhm.
I know Alex Slezarenko. I asked him the same thing, but
Mhm.
I'm just curious on, we have all these fancy things and they're great and they're resilient and the proof is in the pudding. But obviously, it's a different thing to build quality things and then to have people actually want to use quality things. What will be required to
Well,
get people across that line?
I think the bottom line is product market fit, right? And to be honest, the area of the planet that I think makes the most sense for having like decentralized, resilient P2P tools is the areas under extreme economic distress, right? Because those are the type of people that they need access to capital, they need, liquidity, they need to be able to trade with each other because, that's, kind of how you have to get your most basic, needs met as a human. And I know that the crypto space right now is a lot of people in developed countries that are well off that take a portion of their salary and they gamble in a way. You could look at this week, right? The meme coin week. A lot of people threw a lot of money at the idea of making more money. So it was much more, investment driven. It is what it is. But in terms of like actual um, P2P, uh, DeFi, I think it's most interesting when you get into this idea of saying, okay, these people have no functioning system, right? And how can you use or leverage technology to plug them into a global market that's resilient and unstoppable and give them tools to where they can start trading with each other. They can start building their own value where they are. Even, if you look at like chain cash or you look at the idea of a Let's, you could get some really unique, let's just say communities that start using that in areas where there's just not money, right? There's no liquidity, there's no capital, there's no ability to get loans or financing. And I think that those are the most interesting places on the planet to really bootstrap these systems. And if you get something that works well, then it works well. And you then have a great user base that you can start playing with. I know that like with XL, they're working with a cooperative in Africa. Where we're at this point, it's interest-free loans just to get people familiar with the technology. And we can outcompete the market rate that, if they want to go and they want to get a loan from their local financer, the rates, some of them talked about, it's just insane. It makes loan sharks feel good about themselves in the US anyway. So I think there's a huge need for the tool, but it's product market fit. Like, how do you sell that initially to people that already have, financial tooling? They already have credit. They already have they're pretty well off in their own legacy system. I think you got to start where the legacy system is failing or failed. And that's really where like decentralized economic tools are super useful, because then you can connect that group with the group that has capital and liquidity and, can um, kind of bootstrap markets.
Right. Yeah, that would make sense. I would agree with that notion. I wanted to kind of quickly get your take on what do you feel are kind of some of Ergo's most underutilized tools in the tool belt that we often see them in blog posts or on the
Mhm.
website or whatever, and nobody's either had the time or has taken initiative to really flesh them out.
In a way, every tool is just like one mechanism people can use for organic growth, and that's really hard to predict, right? I would say that probably what will happen as the ecosystem evolves is open source tooling will become more composable, and we'll be able to plug more and more together. And so we get kind of more advanced systems because we have more Legos to play with, so to speak. And when you look at open source composable frameworks, you could look at it in a way as a Lego. And so as we build new pieces, someone will come in with an idea, maybe build a new piece or two, and plug in a lot of existing uh, let's say builds, and we create something that's new. I do think that as we kind of wrap up the Oracle upgrade, that'll get more interesting because if the more data feeds you get, the better, and you can build a lot more, um, just a variety of products depending on what data feeds people hook into and how they build frameworks around them. So I would probably say Oracle's at this point, but that's kind of still a work in progress on the development side. So that the first model was resilient, it worked well, but there were some issues in terms of it not being too efficient and having some need for let's say a second version, right? It needed to be refined. And so that's been a work in progress for a while. And I think the first implementation of that will be on Dexy, which itself is, a pretty unique beast. Um, I think that tool will then come into the ecosystem, and hopefully we get people that say, hey, you're wearing a Pirates hat, maybe we'll get sports betting or, whatever, right? All you need to do is have the data feeds, and yeah, you can build a lot around that.
By which metrics should we measure Ergo's success, you feel, going forward? Is it market caps? Is it ecosystem building, open source, GitHub repos, real world adoption, or liquidity and volume? I know all of these are important,
Yeah,
but what
they're
would
all
you say
they're
is the
all
most important at the end of the day if you
um,
had to choose one?
if I had to choose a single one that probably indicates success in any blockchain, I would say it's probably transaction volume on chain. Um, Meaning the chain is being used. That's like the most basic premise. There's a lot of uh, sophisticated projects out there that nobody uses. Um, there's no traffic. And so I would start there, right? I would start with saying, okay, well, traffic is probably going to be, uh, the measure of success. But then when you go and you look at what drives on-chain traffic, it's usually what's being built on chain when you have something that's programmable, right? And that takes you back to like the uh, Lego analogy. When you have open source GitHub repos, you have a Lego, and the more sophisticated your Lego set, the easier it is for you to build new applications that potentially then people will want to use, right? I think ultimately, when you're talking about programmability, it's the applications themselves that drive um, on-chain volume in terms of transaction volume. So how does that reflect in terms of market price? Oof, then you start connecting with like larger forces, right? Many people in the space will say, well, they'll open their thing and say, what's Bitcoin doing today? And that'll give them some idea of what the trajectory of the market is. And then, the people trading Bitcoin are looking at, the larger market in their area, whether it's the US, and then say, oh, well, this happened today. The rates went up, the rates went down. So you start getting a lot of external factors that aren't always necessarily in something, blockchain themselves controls. So that's hard to say, but I would say that when you get on-chain transaction volume, you do have some kind of real-world adoption. Now, the question is, what is it that's driving the transactions? Is it something that's very, phase-oriented, which does happen? We went through like an NFT phase in the crypto space, and so there was a ton of NFT transactions all over many blockchains, and then it kind of, started to burn out. And then there was, this time the meme coin phase, right? And so there was a ton of transactions. Now is that real world adoption? I don't know. It's hard to define that, because you are talking about people that did either put, some kind of money or energy and put it into the crypto space. So it came from the real world, and I imagine at some point it'll go back into the real world. But if you're talking more in terms of like transacting and having economic tools that people are using that run on blockchain without them knowing, that's a long-term goal. And what that would do is drive on-chain transactions. So I think we'll get there, but you kind of go through phases and waves of development.
With storage rent finally being a thing that will actually take place in Ergo after unbelievably 4 years already. How do you see the behavior of being able to use that as a miner? And I mean, it's really hard to really formulate on what it will do, because nobody really knows. But do you have any ideas on, apart from that, it will empower miners and make them a little more relevant and kind of have a key role again, even in the bear market, to at least accumulate more ERG. Do you have any ideas on that, or at least a vision on how you would like storage rent to kind of feature long term? Because obviously, with what happened in Bitcoin, it's a tremendous thing to have a bit of block compression, blockchain compression, and have that role of scarcity that you can't just increase memory on the chain to infinite proportions, as Bitcoin and Ethereum's, the size of the full node and the actual all of the transactions that you're trying to put into that ledger. It obviously runs into a lot of pitfalls if you don't have that on-chain compression.
Yeah, long term, it's just not so sustainable. Okay, so storage rent. What am I interested to see? Let's say day one of storage rent, which pools are actually doing anything, right? That's my first question. Okay, I know that I do work with them, and they'll keep the node version relatively up to date. But who's actually going to prepare, and what are they going to do? Because I do think that the first pool that starts to collect storage rent and distribute it to their miners now has a market advantage over every other pool, right? And I'm hoping that that leads to some kind of competition where pools recognize, hey, if I'm going to retain my miners, I need to support storage rent, right? And I think that long term, let's say on the mining side, we've already seen this to some degree in kind of proof of work Ethereum. Now it was different. You had this idea of MEV coming about, right? And so first there was a pool that started with MEV, and it became very popular, and suddenly all the other mining pools kind of had to adapt, and then it became a question of, okay, well, how much of that profit are you then distributing to your miners? And so it kind of led to a democratization of the rewards, right? Which is a net positive for mining. I believe. With Ergo, the storage rent is its own unique economy, right? The question is, what are the rewards and how are pools going to use that? And it'll be interesting. Will it be short term? Will there be pools that say, hey, we collected ERG and now we have the ability to lend that ERG and potentially earn more ERG? And then they kind of become like a hybrid DeFi liquidity provider, could be. There might be an economic use case for that. I think we'll start to see some experiments in time with pools, because even if I were a small pool operator and I start doing that and I'm like, hey, I can extend your rewards, people will realize, well, if you join that guy's pool and we start hitting more blocks, that's economic incentive there from storage rent can be powerful, could shift around kind of the entrenched players in the mining space. We already saw that with Ethereum, with MEV. So I'm pretty excited about that. And, from somebody that kind of thinks about stuff you can build on top of the network, I think storage rent is fascinating because, we have this idea in the blockchain space of like protocol owned liquidity, where, it's kind of like an autonomous smart contract used in DeFi, right? Well, in any other chain, if that fails, all of that value is just lost or locked, right? In Ergo, it recycles. It recycles itself. So it creates a really unique environment for creating experimentation where, you could even potentially build that into a DeFi framework that after a certain period of time, it starts paying quote unquote like a storage rent dividend to miners. You could really play with that. And it also creates like a sandbox where like if SIG were to completely blow up, all the ERG in the treasury will eventually get recycled, right? It does create like a fail-safe mechanism that is really unique. And if you were to look at like Ethereum, we can talk about lost Bitcoin, but if you look at like how many smart contracts have failed and locked ETH in them, or how many liquidity pairs have existed on a DEX that nobody's traded, and the person that provided liquidity can't withdraw it because it would, screw up the pool. Like there's a lot of locked value, not only in lost keys, but also in, smart contracts that, either aren't functioning anymore or didn't work to begin with. So it's a really neat mechanism for experimenting, because at the end of the day, ERG goes back to miners, over enough time. Now it's a long time, but I really like that idea. It reminds me of this idea that we've kind of gotten into where, we still have metal extraction with gold, but due to electronic components, we've kind of all thrown them in, concentrated spots. And it's like, okay, well, at some point in the future, will we end up mining the landfill and, reconcentrating all of this scrap that is waste, right? And I think in terms of precious metals, at this point, it's like $10 billion a year. It's just spread out across the whole planet. So it's not, economically viable at this point, but, it kind of gets this idea of recycling waste. And that's what storage rent ultimately does.
Right. Right. Yeah. I didn't think about it that way, but yeah. How about for, this storage rent fee, this tax for inactivity to
Mm-hmm.
recycle? The 0.13 or 0.14 erg, is that adjustable by miners at all?
Yeah. It's an adjustable parameter to where, in theory, if it were to create a lot of issue, or there's a period where it starts to create like an economic disincentive, they could turn it off. Like they could set storage rent to 0, right? They could also, turn it up. Now there is a cap in place, but miners have the ability to adjust to kind of on-chain, off-chain conditions in a variety of ways. It's not just block size. It's like input cost, output cost, storage rent. There's a lot of different parameters that miners could use to kind of optimize to the current state of the chain.
Right, along with transaction fees and the like. Yeah, that's very smart. I think it speaks to when we're looking at all the issues we're seeing with kind of the older blockchains propping up and kind of accumulating over time, the kind of skeletons in the closet,
Well,
especially for number one and number two. It makes these type of functionalities very relevant.
yeah, it's true that you need some uh, ability to respond to off-chain and on-chain conditions, right? But you're doing that within, very limited set, right? And so it's predictable. Even that, like you can only increase the block size so fast at such an interval. And if you're talking about on-chain voting, it's pretty predictable. So you have the transparency thing to where you get this idea of forward guidance that people can watch and predict and understand what's coming.
Yeah. Now, with the foundation, the Ergo Foundation,
Hmm.
obviously you're a key member of that, and many people know what you guys do.
Hmm.
But you also spoke about foundations being a necessary evil when
Yeah.
we're talking about decentralized platforms where everything's fair. Now, obviously, the foundation is a nonprofit and
Hmm.
all the funds are traceable, and we can see them as they diminish over time as
Hmm.
intended. Do you have any insights on how to best transition? Do you have that feeling at some point the core
Yeah.
members that we're used to seeing in AMAs and everywhere else become just regular old citizens of the chain? And is there kind of a, without giving too many details, is there a plan for that, like a soft landing where
Yeah.
there's enough milestones hit as
Yeah.
well, which is a tricky balance.
Yeah. I think that, that's something that we've kind of discussed at length because, let's like play this out. One thing that we've tried to do is we've put together, independent group in the community. Sometimes they'll show up to their meetings just to listen and watch, called the Sigmanauts, which are, the application developers and community members and whatnot that kind of have created their own little agenda and plan and, marketing stuff, right? And that's actually been going pretty good. Long term, what would I like to see? I would like to see an association of entities that kind of oversee core development, not just one, right? Decentralized. What would that look like? I think that you would probably need to have governance tools, which we're starting to get, which is very exciting to me. Because if you don't have the ability to do that on chain, it's sketchy. No, full stop. It's sketchy. Like you're at that point, you're kind of in like the old business world. You're not really um, operating like fully on chain. So with fund management, with voting, with those type of uh, corporate tools, so to speak, like management tools, once they're on chain, we have a proper receptacle to decentralize the Ergo Foundation on chain, and we're getting that already. You can look at IDEA is a great example. Okay, it's still kind of in their beta stages, so it's obviously not fully mature yet. But that offers tooling to where we can say, okay, well, what would it be like if we were to put the foundation treasury into that type of DAO, and we were to open the doors, and we were to say, okay, let's form different task groups where different people can come and contribute, and then you get kind of a larger mess with governance, but that's a beautiful thing, right? Because then you get diversity of thought, and the group mind share starts to go up. So I think that once we start to see a transition from kind of not having these tools on chain to having the tools on chain, ideally every application starts to be more decentralized to where you can, be a part of the marketing department or funding or, like the actual long-term vision. Once people have a seat at the table on chain, it changes things. Right now, DAOs are kind of a joke where it's like, hey, come and vote on Discord, right? And hit a poll. Or even sometimes when you get into, fully just like coin-based voting, right? Sometimes you have, such a disproportionate advantage between a couple of whales in the team and everybody else. Good luck having a healthy uh, like debate because there's only a few key people that if they go a certain way, that's the way it goes. So I would love to see our ecosystem, not just the Ergo Foundation, but applications actually use those type of tools to decentralize themselves, form kind of working groups that probably will have some incentive on them, in terms of like, rewards, right? And then everything is more transparent, right? There's no closed door. Everything is on chain. It'll be messy. You get humans and, they're gonna, fight, debate. There's so much the better, in my opinion. At least they have the tooling to support that. So my hope is that over time we start to get independent entities, whether it's applications, maybe even the core developers, maybe marketing. You get a marketing DAO that has, money in it, but it's actually on chain and it actually has tools that are useful, versus, I don't know, sometimes the DAO is like devs arguing online, in Discord or something, and there's no like accountability. We've seen a lot of teams in this space that will raise money for an application and they'll never deliver anything, right? Well, if you actually were to raise money and lock it in a treasury, why couldn't the community fire somebody, rehire someone, right? Like you get management type tooling, and that's needed for a mature ecosystem, right? The Ergo Foundation, I call it a necessary evil because I understand the alternative. There's, let's just play this out. I'm going to launch a chain, right? And so one thing that I'm going to want to do is I'm going to want to have the funding, and I'd probably need legal backing to create exchange partnerships, right? And so if there's no entity that's doing that transparently, what happens? Usually the person with the most economic incentive to do that is a large whale in the ecosystem. And one benefit of being a large whale in an ecosystem is you have the ability to move markets, especially when you're talking about a new project. And then what happens when you're a whale with that power and you have the ability to then pre-know, you have an information asymmetry there. I'm going to list on exchange A on this date at this time. And so, you naturally can make choices that nobody else in the market can make because you have an information asymmetry and an advantage there. And so I'm skeptical that, when I know how the back end works, right? I've gone through, exchange negotiations and signed the contracts, and I understand that process. So I'm saying, okay, well, if you're saying nobody is doing that yet, it's happening, somebody is doing it. And if they're doing it, what advantages do they have over everybody else in the ecosystem? It's potentially a bit sketchy, my opinion. So I was like, hey, if we have an entity, it's on chain, it's auditable, and somebody can look at to where all of the funds go into different wallets. You can look at where those wallets go, right? There's a certain transparency there that kind of is auditable and can show, hey, it's not being front run. There's not, that type of manipulation happening, to where at least there's transparency. Versus when there's no legal entity, there is no transparency. It's still happening, but it's that much harder to know and understand.
Right. You've been very vocal about the painful courtship required to get centralized exchanges to onboard. Ergo as a digital asset on their platforms. And obviously, the funds of the foundation run thin these
Hmm.
days. If
No,
we
they
look
always
at,
have. They
they
always
always
have.
have,
Yeah.
right? And so, with that being said, what do you feel is the proper way to build accessibility to ERG as a native asset and create liquidity channels? Is it to go towards the centralized exchanges to some extent, or is it to do decentralized rails exclusively at this
Well,
point in time?
I think at this point in time, decentralized rails do make sense. Now, do I still talk to exchanges? Sure. But at this point, um, I do think that a more interesting use case for Ergo anyway, as it evolves, is to move cross chain, right? And that gives you access to the liquidity depth in other ecosystems without having to sign a contract, without having to, um, meet liquidity requirements on the exchange itself, which opens a whole nother vector that, you know, is very unpopular to talk about. And that's this idea of wash trading, which is kind of a cancer in the crypto space, in my opinion. Um, but moving across in a decentralized way, I think circumvents a lot of the cost, right? If we're talking, what would it cost to list ERG on the top 10 exchanges? You're the figures in the millions, right? The Ergo Foundation has actually spent more money paying exchanges to support open source infrastructure than we have on developing.
Hmm.
And so it's like, well, that's not so sustainable for a small foundation that's designed, core intent was to bootstrap an ecosystem and developer environment. So I think that if we can circumvent them, certainly we could build liquidity across different ecosystems. We can build DeFi tooling on chain. We have kind of our own emission reduction that we're going through that has its own, economic impact, and position ourselves to where rather than going to exchanges and saying, hey, how much can we pay you to list? You kind of go back to the method where this space started, which is, exchanges built around Bitcoin. Bitcoin did not build around exchanges, right? And then exchanges became such powerful entities, they kind of became the kingmakers in the space. And whether or not they abused that power, I think FTX was a pretty clear fucking answer about, what is possible when you have that level of centralized power in the crypto industry. Is everybody doing that? I'm not making that assumption, but I'm saying it certainly goes to show what is possible.
Yeah. With Rosenbridge upcoming,
Mm-hmm.
do you concur with the idea that the best way to onboard new users with Ergo is to simply provide them a nice toll booth to go through so they can actually bridge properly across a chain that doesn't have a lot of hopefully the same security vulnerabilities many chains tend to have over
Yeah,
time when they're not. Yeah.
I think Frozen Bridge is quite fascinating. I helped design it, right? And part of why I find it so interesting is because I understand the frustration and cost of working with exchanges. And you have to remember something. We're the main net, right? We're like the quote unquote ETH of the ecosystem. And there's a lot of other projects that are building on top of Ergo. Well, at some point, there probably going to be a select group that want to access more liquidity, whether it's exchanges or other markets. And now they're in the same exact position that we were in, right? Full stop. I've had an exchange be like, hey, you can work for us. And depending on the list fee, you can make 10% off the top. I'm thinking, no way. So at that point, I think it was ErgoPad was asking me, hey, will you, talk to exchanges for us? And I was like, well, they want me to charge 10%, and maybe I should do that, get a number and just pay you 10% back, right? Just pass it through back to the team. So at least I know what their bottom line is. I didn't end up doing that because, market conditions changed, but that in and of itself, there's a lot of challenges it presents, a lot of costs that take away from the actual greater value of the technology. So I think if we can disintermediate the middlemen of our own industry, it's a net positive.
Yeah. How about for new users that simply are skeptical of crypto? They see that it
Mm-hmm.
is driven by short-term profits over fundamentals more often than not. And
Well,
they're
I th-
very much afraid of even dabbling in it because they're afraid of losing money. And
yeah,
they're basically scared from the
from
big monster. Yeah.
listen, I think that that's the best place to start. My personal opinion, that's the best place to start. Cryptography itself exists because of a lack of trust. That's the core nature of cryptographic systems is, there may be an adversary that you shouldn't trust, right? Um, so I think that is a wise place to start. Then it's a matter of saying, okay, well, from like the financial perspective, what can you afford to risk, right? And that's something I think everybody should probably understand, look at their life, and act accordingly, right? Um, then it's a matter of saying, okay, well, what are you actually investing in? And then it gets into like due diligence and reading and uh, exploring. Like I think that it makes a lot of sense to, well, let's just use the example of like the real estate market, right? If you're going to buy a building, you might want to get it inspected. You might want to walk through it a bit. You might want to learn a bit about it, and instead of, I guess the gambling side is just the all in approach, right? So if somebody's new and they're like actually curious, okay, I understand gas fees on Ether are a bit high, but what if you put $10 into every ecosystem and you used a couple of dApps, you played around with it, you saw how it worked, you talked with the community, you learned a little bit. I'd say for $300, you could do that across multiple ecosystems or blockchains and learn a lot. And what would that experience then teach you in terms of where value is, right? So that's how I would recommend, people with that type of mindset approach this space. It's good to not trust, and it's good to, you know, limit your risks. But if it's something you want to learn and explore, do so responsibly. And you may just learn a bit along the way, and it'll kind of take you down its own little rabbit hole.
Yeah. So going forward, how many remaining Ergo hacks do you anticipate the foundation being able to kind of organize and in part sponsor? Is that
Yeah,
eventually just going to have to be like a community driven initiative where people crowdfund, hopefully using something like Ergo Raffle or something to be able to sponsor their own inner development, within their own ecosystem?
I think there's always a couple of different like vectors there. The first question that we kind of have to ask, and we do talk about when we set up an Ergo hack is, what number one, what would be cool and what does the ecosystem need? Like what would it benefit from? Right. And when you're looking at open source frameworks as Legos, I think that you reach a point where applications themselves start to ask, hey, if we're going to follow this roadmap, what do we need? Right. And you'll find that there is some concurrency or commonality between projects, right? And ErgoHack is a great way to push for that. Kind of, we've already seen that a lot in our ecosystem where, ErgoPad will take a little bit of what Spectrum built, and Spectrum will take a little bit of what ErgoPad built. And so, because it's just a Lego in their broader application, it makes sense to collaborate, and it would make sense in the future for applications, to work together to say, what do we need and how do we incentivize it? And then we all benefit from it, right? And then I think you also have this idea of um, like the launchpad style. ErgoPads already put skin in the game in different Ergo hacks because they benefit from having new projects come to market, and I think everybody does with new ideas. I know that the last Ergo hack we actually did have a community prize anyway. Um, but it's something that I think it would be cool if the Ergo Foundation were to step back a little bit, um, to where the community could pick what kind of ergo hack they want to push out, and they understand, okay, well, what would the length of it be, and then play around. I think it's always good to have more than a single like point input. I think having the Ergo Foundation, the responsibility, the roles of it split up and distributed is better for the ecosystem.
Right. Going back to things domestically,
Hmm.
you have had firsthand experience with the frustrations of trying to push through with innovation in the US and obviously seeing deliberate efforts to stamp those out. Yet
Hmm.
here we are. How do you feel about the fiat currency problem? Is Do you feel like all of this uncertainty around crypto and kind of fear and hysteria comes from this idea that the government doesn't really have a whole lot of accountability when it comes to money, and
Government,
somehow
yeah,
they're losing relevancy through this thing they can't really stop?
yeah, the government has a monopoly on money, and one thing that tends to happen when you have a monopoly on money or on any industry, first of all, is quality. Generally is not that great, right? And I could use the example if I'm going to have to go wire money, right? That's a pain in the ass to go to my bank and say, okay, here's my piece of paper with the numbers, and then they write it on their piece of paper, and then I have to double check it, and then I gotta wait, a day or two or three or four, depending on whether my bank actually has access to the Fed system or if they're using a partner bank. So the actual, like to get cash around the world is usually quicker to carry it physically, right? Like that's a pretty poor system. Then you have this idea of monetary policy, which is its own clusterfuck, if you don't mind me saying that. Where at this point we're what, $30 trillion in debt and growing at what rate, and what rate of our budget is the interest payment for that. So there's huge long term financial implications, and then you have people that have built their entire existence in this system, and they depend on the idea that the government is going to pay for their social security and other you know let's say investments that they've made in the current fiat system. And in some societies we've seen what happens when that unwinds, right? You can look at Lebanon, and you can look at Turkey, you can look at Argentina as the hot topic of the day, at least as we're broadcasting that, where you get massive inflation and then the cost of living goes up, and people's savings power just disappears, right? And so people, especially younger people, I think in the United States, have seen like the effects of inflation. They've seen housing prices go up to where the grind gets harder, right? There's a lot of people out there that work quite hard, and in their mind they don't quite keep up with the rate that everything is increasing in price. And who knows, maybe that'll overheat due to interest rates and balance itself, or maybe that'll create a new problem that we get to deal with. Hard to tell. But there's certainly a lot of pressures out there that are kind of pushing people to explore alternative systems, because the old one doesn't work well for everybody. It just doesn't.
Yeah, I think that would be a good place to conclude. Well, before that, going forward with your involvement in Ergo, what is it that you envision
For
long
me,
term? No, no, not for you. For the ecosystem.
for
What do
the
you
ecosystem.
envision? What is your hopes and dreams for the ecosystem? Let's say 20 years from now,
Okay,
and
20 years.
it will still be around, that's for sure.
Yeah, yeah, I hope I'll be around and still helping build stuff at that point. I hope the foundation will be a distant memory and power will be distributed across the ecosystem. I hope the miners will kind of have matured to the point where they really use and forecast, kind of their governance power to optimize and balance, the economic incentive that they need to do business and the state of the chain. Um, in terms of like the industry, not just crypto, I hope at some point we start to see jurisdictions that allow direct onboarding to where you actually have custody of your funds to where you, let's say, move on to somewhat similar to what already happens with like USDT or USDC stablecoin type thing. But you want to move X value onto this blockchain and you get you can do it in a custodial way, right? To where you're not having to deal with trust in that situation. And I would love to see the type of counter economic tools that Chain Cash and Let System have to where they create their own counter economies that are secured by a decentralized blockchain. It'd be really cool to see, as phone adoption, increases, see that type of global access to liquidity to where everybody gets more competitive rates in an open market. Uh, you could potentially, let's say, drive down the cost of borrowing and access to capital for a lot of people. Now the real question, I think, underneath that question is the market is probably going to go one of two ways, right? It's either going to go more towards this open and inclusive, broader adoption, or I think it's going to move towards more of the uh, counter economic direction where privacy is much more important and people kind of use and control and let's say interact with their own value kind of in parallel with whatever economic system they're in, and it's more gray, let's just call it that. And I don't know how that's going to break. There's it's not up to me, is the bottom line. It'll probably depend on where you are and what your jurisdiction thinks, right? Like if we're talking about global adoption, I think that's probably a bit of a pipe dream. You'll still have people, that are locked in certain economic regions that, it's either illegal or outlawed or discouraged or very, very, very heavily taxed. And, then it kind of pushes things into the gray direction where it's like, well, if you have privacy ability and tools to kind of offset that, and at that state, it may be more of a counter economy versus in another jurisdiction, it may be more open and accessible. And who knows, how cool would it be if you could go to your credit, union and say, hey, I want to, purchase X coin, and you actually get the seed for your own coin and self custody it, right? Like there's a lot of different ways that the industry could evolve. It just depends on regulation for the most part. And so my philosophy generally has always been we should build a system that can support somebody in the worst jurisdiction. That's how you create a global network. Like we need to go, if I don't know, some North Korean can run a VPN and get past their firewall, they have the privacy tools at hand that they could potentially circulate that, in a highly repressive environment. That would be the optimal outcome. And that's what I hope that we build and, attach a lot of functionality, programmability, and tooling on top of that anyone, anywhere can use that regardless of whether it's approved or sanctioned or whatever, right? I think that's what a truly open and permissionless system should be capable of.
Perfect. Well, Joe, I want to thank you for your time. I think that
Yeah,
now that is a great place to stop. Again, as I told you before the interview, the whole community really appreciates kind of your Abraham Lincoln words of wisdom when it comes to crypto. You're
I
looking more like an elder statesman every time. So Thank you for your thoughtful responses and kind of a refreshing take on what often feels like a very frustrating industry to be in. So thank
I,
you.
I'm always excited about just the idea, right, of what is possible with these type of systems. And I think ultimately, if it's done right, it could make the world a better place and deliver value to people. And that should be long term. Like, what is the greatest metric of success of the industry? Is do we deliver value to people that the legacy system has neglected?
Absolutely. Well, thank you all for watching, and thank you again, Joe. That was really something. I was like an audience member, pretty much, which is good. Which is good. That's where I want to be as an interviewer. So, thank you.
Yep.